ladies and gentlemen. I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's outlook on Monday, we're going to start with the Asian markets. They traded mixed in the morning trade, with, of course, as we can see, the Nikkei continuing its trade session of gains, likely getting a boost from a weaker yen and, of course, better than expected Japanese economic data. As we can see, the Nikkei 225 jumped to 1.7% with 298 massive points to end at 17,673, following, of course, the release of Japanese third quarter gross domestic product, which showed the economy grew about 2.2% year on year, with, of course, China's fixed asset investment, also another set of data, rose 8.3% in January to October period, with beating, of course, market expectations, while October industrial output and retail sales growth missed forecasts. Of course, despite the rather mixed data that we had already, the Shanghai composite, which ended up about almost 0.5% in the positive territory, up 14 points on the day at 32.10. And of course, the Shenzhen composite up about 0.3% or about 6.3 points to 21.15. The yen remained weak against the US dollar in early Asian trading, with the dollar trading at 107.60 yen compared with levels around 104 on the election day in the US last week. Of course, and now is up about 1.14% at 107.80. European markets were higher on Monday, shrugging off broader lower trade in Asia on tick up in bond yields and, of course, US dollar, that is stoking risk appetite. The Pan-European Stock 600 index is 1% up with also 3.5 points in the north. As we can see, also the rest of the major European markets are also up 100.6 points up for the FTSE 100, or almost 1% higher, and the DAX we can see 56.20 points, or about 0.8% in the positive territory. The dollar rose to a 9-month high against a basket of major peers early on Monday. As we said earlier, a risk-on mood is on global markets triggered by Donald Trump's election remained firmly intact. And as we can see from the board here, the euro is very pressured on the with the dollar, with 0.9% in the south on the day at 1.0755, as we can see, after it dropped to its lowest since January. The pound was also down 0.8%, or about 100 pips down at 1.25 after it struck a high of 1.2673 last week. Sterling, of course, benefited, as we mentioned long ago, as market focus turned away from the Brexit towards potential political risk in Europe, with, of course, expectations that Trump's win could strengthen Britain's ties with the United States. Gold was still down on the day 0.5%, or about $6 down, 12.80 at the moment, as it hit its lowest in more than 5 months, pressured by the stronger US dollar and expectations that the Federal Reserve will raise interest rates in December. Gold was down, as we mentioned, to 12.80 an ounce early in Europe, as it fell as much as 1% on throughout the Asian session to 12.50 an ounce, as I said earlier. Oil prices were a little changed on Monday near multi-month low, of course dragged down by worries about oversupply as OPEC saw record output last month. And as, of course, as we saw the numbers, US oil rig count rose again. West Texas Intermediate crude futures were a little changed, actually, up about 0.05% at 43.30, or just 2 cents up a barrel. That's all from the most important news of today. I'll see you again tomorrow. Bye-bye.